Greetings all, Last Outrider here with another Inquisitorial analysis for you. This time we're talking about the GameStop short squeeze. Wall Street cries because its time is over. I'm making this, A, because people ask me what did I think about it, but more importantly because this is one of the times where nobody actually explains what actually is going on. Even in 2008, somebody was out there actually explaining what happened. What was predatory lending? What was shorting the housing market? Somebody explained why this happened. Nobody's explaining this. The CEOs of Robinhood and all these other traders, nobody's explaining it. Even that one guy, Interactive Trading CEO, kind of explained it, but not really. He did talk about how they weren't, he was afraid that clearinghouses and brokers were not able to make their margin calls, but not really what that means, because when did clearinghouses and brokerage agencies have margin calls? That's the person who is buying the stock. It's the brokerage agency that's making the margin call on the buyer, not the broker itself. So, let me explain. As you all understand, or if you don't understand, shorting involves a hedge fund borrowing stocks and then selling them later at a lower price. Now, you will say that that's all the risk on the shorts. Yes, it is. But shorts cannot exist unless there is somebody there to lend them the stock in the first place. And that's the key issue here. Where do the shorts get their stock from? Who's lending it to them? Where do those people get their stock from? This is what's going to be the hot button issue. The answer is there were no stocks to lend. Well, if that's the case, then shorts are just a giant pile of bullshit from square one. They don't exist. You have to at least, on paper, at least the potential to have the stock to lend to the person making the short, or the entire thing is a work of fiction. And that's what we're going to find out is what happened. You see, in a normal situation, you will always be able to theoretically say that a broker had enough shares going back and through in their system that they could loan the companies their shorts. However, in this situation, all of these retail buyers, the brokerage companies and the clearinghouses, had no authority to say that these people would share their stocks with the hedge funds to cover a short. This is the power of institutional trading. See, a clearinghouse could call another hedge fund, another institution, another personal billionaire owner and say, hey, can I borrow some of your shares for a few hours to cover this guy's short, or 30 days or whatever? And this also, 30 days, this is a key thing. This is why that Massachusetts Secretary of State, who the hell is this guy? And who the hell cares what a Secretary of State of Massachusetts thinks about this in the first place? That's another video. But he wants a 30-day moratorium. That's the reason. Because what you're going to find out, what the SEC is going to find out, and here's the inquisitorial prediction, is that there are not enough GameStop and other 12 symbols available on the market to cover the shorts that exist right now. That's a problem. Can you see the problem? The problem is that if the brokers and the clearinghouses don't have enough shares to cover the shorts, well, A, they should not have made the short in the first place, but B, they eat the cost. Do Do you see what I mean? That means that the hedge funds won't have to pay on those lost shares if the brokerage and clearinghouse companies didn't have shares to loan them in the first place. So that's kind of good news for the hedge funds, right? They said, hey, loan me whatever shares they needed for the short. But if it turns out the brokerage company didn't have the shares to loan, then the hedge fund is not on the hook to pay the higher price when the short goes bad. And I'm guaranteeing you that's exactly what the hedge fund called up the clearinghouses and said, hey guys, you best have been able to show that we have those shares available to put in our name, because if you didn't, you're paying that price, not us. And then the clearinghouses say, oh, fuck. You think we can call up these Wall Street bets people and see if they're going to agree to lend us some of their shares so that the hedge funds can get a bailout? No, I don't think that's going to happen. Well, what do? I know what we do. How about we stop people being able to buy this market, the shares, but still allow them to sell it. That way, we get the shares to loan to the hedge funds, but we don't let anybody else buy. That way, we can make up the loans that way. Yes, brilliant idea, until the SEC comes in and says, what the hell is this? You, in no way, shape, or form, have the ability or authority to stop trading to cover your freaking hedge fund bets like this. Sorry, you're still screwed. If the Biden administration has the gonads to stick it to the billionaires and the clearinghouses like this, then that's possible. Then these hedge funds won't lose as much money. The clearinghouses will lose the money. And now, in the future, clearinghouses will not be able to make any shorts sales unless they can prove they have in their own portfolio the shares to cover the loan, which I guarantee you they will not be able to do. So that is effectively the end of short sales. Now, the second part that's going to come into play is the end of Wall Street as we know it. And that's going to be what we learned from campaign finances, right? We learned from campaign finance that small $20 or less donations raised far more money for Obama, for Bernie Sanders, than any of the big donors could ever hope to match. This same phenomenon is now appearing on the stock market. Okay, 2 million small-time investors, retail investors is what they call them, can outbid any group of billionaires. And they're about to realize the amount of purchase power and advocacy power that means. Big-time Wall Street dealers have been doing advocating investing all the time. That's what you hear about George Soros and everybody. They invest in what they believe in, what they like, what they know, and those things prosper. And what they don't like, they screw in the butt, and those things don't. Well, what happens when those 2 million, 3 million, whatever small-time investors start grouping up and investing in what they like and taking away money? Oh, suddenly we don't want to invest in anything that has any connection to Trump. Pull our money out of that. Or we want to invest in every single Trump competitor in the world. Ooh, give them a couple $1 billion courtesy of fuck you. Can you see what I'm saying? Wall Street knows they cannot beat this. And with the new wave of regulations that this SEC is going to create, like they must be able to cover all their margins, their days are done. More importantly, their days of fixing and manipulating the markets are done. There is no putting the genie back in this bottle. These people, remember, already these small retail investors have earned, as my last counting, $2.7 billion. $1 billion has already been paid into the accounts. The other $1.7 billion is sitting in this little limbo land of settling up their accounts in a future date. It hasn't actually been collected yet. And I guarantee you, a lot of that is going to go straight into Bitcoin and other cryptocurrencies like that, and Ethereum and whatever. So it's going to be, woo, straight out of the market altogether. And then they're going to come back, and they're going to do this 10 times stronger. This was just the first shot. Now that they have that money, you think this isn't happening again? You think this isn't happening all over the world? And even if they completely shut it down in the United States, which they won't, you think they're not going to go over into Europe? London Stock Exchange, Tokyo, Singapore, Hong Kong, who knows? Every single place on the planet, they're going to be able to do this very same thing. Every single stock clearinghouse company and stock market on the planet. You can call this the trade that was heard around the world. Is suddenly going to be wary of this same situation, and shorts and corporate institutional manipulation around the world is sitting up and taking notice. And billionaires, they're having a sphincter tightness episode 10, okay, on the Richter scale. Okay, they are losing their bowels in a big way. Big way. And that's going to be fascinating to watch. And this is the perfect administration for that to happen in, which leads me to believe that the fact that this happened 1 week into a Biden administration, where Elizabeth Warren is going to be heading up the SEC or something like that, I smell planning. Not collusion, just planning. This is not a new idea. And the fact that this happened 1 week, now I don't have a time machine, but I can guarantee you that if Trump had won the election, this would not have happened. Because I guarantee you, Trump would have told the SEC to fuck the little guy if it did. So, you know, they were afraid that they were just going to come in and regulate Wall Street to death and just tax the billionaires. They weren't going to do that. This is what they're going to do. They're going to use the same rules that Wall Street has always lived by to drain all of the money out of it and give it to people. And Wall Street will lose its mind and come out and complain that, wait, free markets suck if we're not losing money. Free markets really suck if average people get power. Are you insane? We cannot have 2 million other millionaires running around all there. That's just, no. You gotta regulate that shit. That's my prediction for 2021. Until next time, bye.